All right, so let's go. Investing in bonds and other fixed income instruments. What are fixed and variable? So whenever you hear the word fixed, it means there is another word which is the opposite of it that means variable. So all investments that you can think about would always fall under two buckets: fixed income instrument or fixed income investment and variable income investment. So what are fixed? So when I can use the word interchangeably. So when I say securities, I can interchange it with instruments. So just know that I'm talking about the same thing. Fixed income. Rosalind, you are not admitting people. Fixed income instruments. What are fixed income instruments and what are variable income instruments? Fixed income are those kind of instruments that gives you a regular, predictable return over a certain period. So it means that fixed, once you hear fixed, it means you can predetermine what your interest would be before the investment even consummates. Before you do the investment, you know what your return would be. Any investment that tells you what the return would be in specific term, it's most likely a fixed income investment or a fixed income instrument. What are variable income instruments? Variable income instrument refers to those that the earnings fluctuate greatly based on market forces, right? You cannot predetermine how much you would earn from a variable income instrument. It fluctuates. It's usually based on the law of demand and supply. Based on the last class that I taught you, what do you think equities will fall under? So anybody unmute yourself and talk. Where do you think equities will fall under, fixed income or variable income? Anybody? Unmute yourself and talk, or type it in the chat box. Let me know that you even understand what I've been saying. So please unmute yourself and talk. Excellent, excellent. So I can hear people. Okay, excellent, excellent. I'm proud of you guys. So it shows that we are really following the class. Thank you so much. So this is encouraging for me. Thank you. So variable instruments fluctuate based on market forces, demand and supply. Variable income securities provide investors. So the major thing you also need to know about variable income instruments is that it is higher risk and higher return. Don't forget that basic law of investment, that the higher the risk, the higher the return. You cannot say you want high risk. You cannot say you want high return and you're not willing to commit to high risk. So it cannot work. So variable instruments operate on the it's like a pendulum, two sides of a pendulum. The higher the risk, the higher the return. So one of the things that differentiates a variable instrument from a fixed instrument is what is called predictability. That is the main difference between a fixed instrument and a variable instrument. You can predict. Returns in variable income securities are not guaranteed and cannot be known from the beginning. I've said that already. While fixed income, on the other hand, provide you can determine what your interest would be before the investment is consummated. So predictability is the major factor that differentiates variable from fixed instruments. So let's go. These are some of the examples of fixed income and variable income. Examples of fixed income: bonds, which we are going to talk extensively about today; mutual funds, which you have been taught by Codros; fixed deposit or certificate of deposit. So I'm also going to tell you the difference between a fixed deposit and a certificate of deposit. And variable income instruments are shares, ETF, REITs, Then I also said money market short-term instruments. There are also other money market short-term fixed income instruments that we're going to talk about today: treasury bills, commercial paper, certificate of deposit, which I already mentioned before. So let's now take those fixed income instruments one after another. The first one is bond. From that word, bond. Bond means something that is binding, that you cannot go back on. When I say my word is my bond, that's what bonds means in English. But what does bond mean in finance? Another word for bond is loan. Anytime you hear about bond, the first way to quickly understand it is quickly replace that word bond with loan, because bond is a loan, right? Bond is the fixed income instrument that represents a loan made by an investor to a borrower. Let me take that again. A loan that you give as an investor to a borrower. The borrower can be government, the borrower can be corporate organizations, the borrower can be a startup company. So any loan that you give out to as an investor to someone that is looking for funds, right, is called bond. You can also think of bond as an IOU between the lender and the borrower that includes the details of the loan and its payment. So the long and short of the story is that bond is a fixed income instrument that can also be like a loan that has terms and conditions. Let's continue. How does bond work? How does it work? How does bond work? So when companies and other entities need to raise money to finance new projects, maintain ongoing operations, or refinance existing debts, they may issue bonds directly to investors. The borrower issues a bond that includes the terms of the loan, interest payment that will be made, the principal, and I know what happened. I got thrown out. So I'll just continue from where I stopped. So I was talking about bonds. I was talking about how bonds work, right? So what are the features of a bond? What are the features of a bond? So these are some of the terminologies that you need to understand when we talk about investing in bonds, some of the important terminologies. You have face value. So anytime you see bonds, you see an announcement for bonds, you will see face value. Okay, I've not gotten, let me not get ahead of myself. Face value is the money amount the bond will be worth at maturity. It is also the reference amount the bond issuer. The bond issuer is the person that wants to collect the loan from you, right? For example, an investor purchases a bond at premium for 1,019 naira, and another investor buys the same bond later when it is trading at a discount for 980. When the bonds mature, the investor will receive the 1,000 naira face value of the bond. So we're just talking about what is the face value of a bond. It is the amount that this bond is worth at maturity. So a bond can be issued at discount and it can be issued at premium. So depending on when you want, when you are entering your own entry point, you might enter at a point where it is trading at a discount. You might enter at the point where it is trading at premium. So another terminology, but the long and short is the face value is the amount that the bond is worth at maturity. The other point you need to understand, the other term that you would come about in bonds investment is called coupon rate, right? In bonds, they don't really use interest. What you hear a lot of time is coupon rate. So coupon rate is the rate of interest the bond issuer will pay on the face value of the bond expressed as percentage. So let's say this same example right now, the face value of the bond is 1,000 naira. And the person has said, the person issuing the bond, the issuer of the bond has said, I would pay 5%. This is a bond that will pay 5%. So it means the coupon rate, right, which is the same thing as the interest rate of that bond is 5%, which is 50 naira. So coupon date, another term that is important for bonds is coupon date. Coupon dates are the date on which the bond issuer will make the interest payment. If you are following well, in one of our deliberations where I explained how bond works, I said, what is the frequency of interest payments for federal government bonds? Anyone? Let me see whether we are following. I know we had this conversation. So type your answer. Let me see. Bike network, no throw me away again. Crucial time. Okay, sorry. Yeah, we are back now. So if you are following, tell me, what is the frequency? Quarterly. Excellent. I like this class. Excellent. Quarterly. So it means the coupon date, right, for the federal government of Nigerian bond is quarterly. So the coupon date is the date that the issuer pays you the interest on that bond. Then another thing you need to understand is maturity date. Maturity date is the date on which the bond will mature, right? And the bond issuer will pay the bond holder the face value of the bond. What is another word in investment that you can use to replace face value in this context? What is another word? Any other person that wants to help? Another word that we can use to replace face value. Don't tell me par value. Just tell me another investment word. Chat box, put in the chat box. Capital, excellent. Another word. Capital, yes, guys, I'm looking for one word. When you take a look, excellent. Thank you, Jackson. Is principal. That's the word I was looking for. So it means in bond, instead of saying principal, you can say face value. It is the same thing, right? So those are the ways in which you won't forget these things by bringing it, putting it in context or using words that you are already familiar with. And of course, the last one is the issue price. Is the price at which the bond issuer originally sells the bond, right? In many cases, bonds are always issued at par. So let's move to the other slide. What are the types of bonds? There are so many types of bonds, but these are the three that I want us to, these are the three that you would always find in Nigeria. Don't forget, this course is really about investing in Nigeria, investing in Nigerian capital market. These are the three types of bonds that you will find in Nigeria. In the US, you might find municipal bond, but in Nigeria, we don't use municipal, right? So the first type of bond is called corporate bonds. Corporate bonds are issued by company. So like I said, if you want, bonds is simply, you want to borrow money from the public. That's what bond is. So when people say that, when you hear that Nigeria is owing a lot of money and all of that, Nigerian debt, or just like any other country's debt, is divided into two. All countries have two kinds of debt. There is the foreign debt and there is the domestic debt. If you Google what is Nigerian's debt, you will see total debt. But if you do a breakdown, you will see, let's say Nigeria's total debt is 8 point something trillion. Out of that 8 point something trillion dollars, maybe 500 billion would be domestic debt. Where do you think the government gets that kind of money from domestically? Where do they raise money from domestic debt? They raise domestic debt from people like you and I. It means me now, Nigeria is borrowing money from me. What bonds mean is that government is borrowing, that if you subscribe to that federal government bonds, what you have done is you have borrowed government money and they are going to pay you interest. You can say Nigeria is owing me. And it's not only Nigeria that does it. There's something called Eurobond, right? Why some of us might not be able to do Eurobond is the minimum requirement. Some of us cannot even afford it because I understand that you are beginners, right? Like I told the people in the alumni group that I'm going to be doing another course that is advanced investing. Advanced investing, for you to do that course, you must have minimum of like 50 million naira that you're ready to, because there are investment that you can do if you have 50 million naira. But what I'm taking us through now, people, okay, you're just starting the journey. You don't even understand it. So there is Eurobond. To do Eurobond in Nigeria, a lot of players will tell you that you need minimum of $10,000 to even start. Right? Some people will tell you need 100. There are some investments that if you don't have $100,000, you cannot even talk about starting it at all. So are you now going to say you want to wait till you have $100,000 before you start investing? No. These are the other small ones that we with our 5,000, 10,000, 50,000, 100,000, 1 million, 10 million, the things we can do, these are the things that we are doing. That's why this course is very deliberate. So corporate bonds, just like government can raise money from the public, right? And it's done everywhere in the world. Everywhere. US raises money from the public. China raises money from the public. Nigerian government also raises money from the public, right? So I said something about domestic debt. Domestic debt is in two folds. They can take money from the public, and they can also take money from CBN. CBN can borrow the government money, right? And the public can also borrow the government money for its project. So the same way government can raise money, Nigerian government can raise money, corporate companies like First Bank, Dangote Cement, Bua Sugar, all these big companies, the same way they can also issue what is called corporate bonds to raise money from the capital market, or capital market is also called stock market. It's also called Nigerian exchange. They can issue bonds to raise money from the market, right? So there are three categories of bonds, like I've said: corporate bonds, which are instruments that allows companies, public, not just any company, public quoted companies that have PLC on their names, to raise money from the floor of the stock exchange through bonds. The next category of bonds is what is called federal government bonds, such as those issued by federal government. So in Nigeria, the office that is created to manage bonds and other debt that government raises from the public is called Debt Management Office, DMO, right? In the US, it is US Treasury, right? Just like federal government can raise money through bonds, we also have state government or local government bonds. State government, if you hear that Lagos state government is raising money for one thing or the other, they can also issue bonds. Local government within the country can also issue bonds to raise money from the capital market and give people percentages. So what you hear, so two words that a lot of times, people confuse them for each other are bonds and bills. Bonds issued by the Treasury with a year, because when you look at it, there's really no difference between Treasury bills and bonds. The only difference between them is the duration, the number of years involved. In the context of Nigeria, I'll tell you what it is in the context of Nigeria. Bonds issued by the Treasury with a year or less to maturity are called bills. So it means that bills is a fragment or a segment or a subset of bonds. So Treasury bills operate like bonds. The only difference is that Treasury bills is for shorter period of time. It's for shorter duration. So bonds issued with 1 to 10 years maturity are called notes, and sometimes called bonds, depending on the country involved. So a lot of these financial terms operate the same way, in a similar way, but with tweak and twist, depending on the country in question. In the context of Nigeria, bonds can be 1 year is bonds already in Nigeria. But in some other country, if it is less than 1 year, if it is 1 year, they might still call it Treasury bills. So it depends on the country and the regulation, the financial regulation within that country that dictates whether it's a bond or a bill or note. So the entire category of bonds issued by a government treasury is often collectively referred to as treasuries. Government bonds issued by national governments may also be referred to as sovereign debt. So government bonds issued by national government, which is also federal government in Nigeria, we call it federal government in Nigeria, may also be called sovereign debt. So on that note, let's move to T-bills. T-bills or treasury bills are short term. I already said it, that it operates the exact same way. As a matter of fact, government is the way government issues bonds, they can also issue treasury bills. Look at the difference. Treasury bills are short-term government-backed securities issued by the CBN. They are issued when government requires short-term loan. They can reach maturity in 364 days. T-bills are sold at a price lower than the face value. I'll give you an analogy of that. But let me explain this again. That the major difference between a bond and a bill or a treasury bill is the duration. If it is 1 year and below, it is treasury bills. You cannot, in the context of Nigeria, you cannot issue a bond that is, bond in Nigeria is 1 year and above. 1 year, 2 years, 3 years, 4 years, 5 years, 10 years, bonds. But if it is less than 1 year, maybe 90 days, 180 days, 6 months, it is called treasury bills. So how does treasury bills work? The CBN sells treasury bills in a biweekly auction. Buyers submit bids and the average lowest bid is chosen. The government sells these bills at a discount lower than face value. Unlike bonds, what would happen in bonds is there is an interest that will be given, right? But they are not, the way T-bills work is slightly different from it, and we're going to see a typical example of that. Look at this. Here is a typical example to understand how T-bills works. The CBN sells a treasury bill for 100,000. The federal government issues the T-bills at 90,000, that is at 10% discount. Tunde, an investor, pays 90,000 to buy the T-bill. At maturity, he will get the face value of 100,000 naira, which means he has made 10,000 naira as profit. So in treasury bills, it's not really about percentages. The percentages is expressed by either discounted rates, is expressed at the discounted rates that you get that bill for. Okay, before I go on, let me see. Okay, let's move on to another one. The commercial paper is another fixed income instrument. I've discussed bonds as a fixed income instrument. I've discussed treasury bill. The third one is commercial paper. What is commercial paper? Commercial paper is a type of short-term investment instrument issued by corporation to certain types of debt liabilities. So what is the difference? Quickly think about what's the difference between treasury bills and commercial paper. Someone should. From that first, don't go beyond the first statement I've just made. I've just defined commercial paper. From that definition alone, what is the difference between this and the previous one, commercial paper? Anyone? Put it in the chat box. What do you think is the difference? Based on the first thing I've just said now, what do you think is the difference? Anyone? I don't know what's happening with my network today, though. We will survive it. Okay, so what are you guys saying? Let me see. What is the difference? Excellent. So that's the major difference. T-bills is issued by government, CBN. Commercial paper by corporate companies. Excellent. That's the major difference. Excellent. Thank you. Thank you. What's the other? I don't know what is happening to the network today, but it's MTN. We will survive it by the grace of God. I don't know what's happening. Okay, so thank you. The major difference between T-bills and commercial paper is that first difference, treasury bills is issued by CBN on government. Commercial paper is issued by corporate organization the same manner. So corporations issue commercial paper when they need to cover time-sensitive financial liabilities like payroll and sensitive inventory expenses. In exchange for these financial needs through purchase of commercial paper, investors purchase offering. So you have to pay attention to how these two investments work. Commercial paper is very similar to treasury bills. In fact, they are the same thing. The only difference is the issuer. They are both short-term instruments. They are both used to cover if a company, you are running into problem, cash flow problem, and you need a quick fix. Commercial paper. The same thing, government, you have need for quick money, quick fixes. treasury bills. So they work in the same way. In exchange for funding, for providing this funding through purchase of commercial paper, investors purchase offering below nominal value of the investment, the par value, and earn interest. Commercial paper is only issued by firms with high ratings from credit rating agencies because it is unsecured credit, right? There's no collateral for it. So the only companies that can issue commercial paper are top-rated companies with high ratings. So let's see a scenario on commercial paper. I think this scenario will help you understand it better. So I want someone in the audience to read this scenario. Someone to read. Anyone? Anyone can read. Anyone? Adedayo, you can read. Thank you for volunteering. Oh, okay. You can't unmute yourself? Can you unmute yourself? Okay. Oh yeah, read.
Yes, I've done that now. Okay. Good afternoon, everyone.
Afternoon.
ABC Corporation, a thriving FMCG in Nigeria, is looking to create a new product line ahead 2023 Christmas, which is a peak period for the business. Though this business has an excellent credit rating and consistent income, it does not have the liquid cash needed to fund the new product line. The company needs 200 million naira to produce the new batch. The company board decided to issue a commercial paper valued at 200 million, and to entice investors, they offered it at 206 million naira with a term of 30 days. If an investor loans the business the 200 million naira, it will return 206 million naira when the term is up. An investor who thinks this is a good deal signs onto a commercial paper with the company and provided the business with 200 million in financing. A month later, the company will return 206 million to the investor.
Excellent. Excellent. Thank you so much. Your voice is so sweet. Thank you, Adedayo. Okay, so it is very clear. This is the same way that treasury bills work, right? It is issued at a discount. You know the par value. They tell you the par in the advert. You already see the par value. It is 200 million. The 200 million here is the par value, right? Is what it is. But if you give us this 200 million, we are committing to paying you back 206 million. So that is why I said that these are fixed income instruments. Before you go into it at all, you have seen clearly what is your earning, what are you gaining from there. And these are structured investment. Okay, is that a question? I can't hear anything. iPhone, as much as possible, you guys should just, once you log in, try and change to your name, so that it's because of cases like this, your name is not iPhone. So once you log in, first thing, try and just change your name into, if you can't, you don't have to put your full name, you can put your first name, it's okay. But that's the way commercial paper and treasury bills work, right? But is this clear? Is this scenario clear? Does anyone have any question on this scenario? You can type your question, or if it's clear. But is it clear? I want people to talk. Yes, it's clear. Thank you. Thank you. Because it's very straightforward, really. So you know what it is. You know what you are getting into before. And another thing you should also know is that fixed income instruments, they are low risk investments. Because they are low risk investments, what does it mean? Low risk investment means what? I want an answer. Low risk investment means what? Low risk investment would be equal to low returns. That is a low profit. Low risk investment will be equal. It is given. What it is low risk, because you already saw where, because you look at it that a whole 200 million, and all I'm getting is 6 million. Is it not better within 30 days for your money to be sitting in the bank doing nothing, but you putting it into good use? But one thing you must know, I saw a question someone is asking, well, if first and foremost, you cannot do treasury bills or commercial paper if you don't have money. It is not for small investment. 2,000, all I have is 100,000 naira. No, you can't. All I have is 500,000. No, it is for people. In fact, commercial paper that I've seen, the cheapest commercial paper that I've seen lately is 5 million naira. So if you don't have that 5 million naira, don't bother. Don't bother asking for it. Of course, there are some companies that will now say, let us create miniature or mini treasury bills. Some companies do that. Some fund managers do that. And the logic is, just like as I am now, we're having a group. What we're doing, we are building an ecosystem, right? It might take a while. It might take us another 2-3 years to get there, where we now have a strong finance team. And I say, okay, this group now, we have 1,000 people that are doing very well in their own right. And we see this treasury, we see this opportunity, 200 million to get 206 million within 1 month, right? And I say, okay, in the group, oh yeah, let's break it down. 1,000 people, how much do we need to bring so that we can raise that 200 million? Then we pull the funds together and invest. There are companies like that doing that presently, right? Funds managers, they do that. Cordros does that. Cardinal Stone Partners do that. So that's what all these fund managers do. Even though you don't have the access, you don't have the opportunity to do the funds by yourself because you can't afford the money to do it. They pull funds together from a lot of investors and take advantage of these kind of opportunities. So that is how commercial paper works. Let me move to the next slide. Then the next one, the next fixed income instrument. Someone should type, mention 3 fixed income instruments that we have discussed from the beginning today. Someone should type it. 3 fixed income instruments that we have discussed from the beginning of this lecture. Bonds, yes. T-bills. Commercial paper, excellent. I'm looking. Some of you are just waiting for other people to be typing. So that I'm sure that we know what we're learning. Excellent. Let me just continue. So the next one is certificate of deposit. So certificate of deposit looks like, as a matter of fact, when you understand the context of the country that you're operating from, right? In Nigeria, certificate of deposit and fixed deposit are almost the same. In fact, I wrote it here, Seth. I wrote it here. In Nigeria, however, there isn't much difference between certificate of deposit and a fixed deposit. You know what a fixed deposit is? You have 1 million naira or 2 million naira. You approach your bank, your regular commercial bank, and tell them, I want to open a fixed deposit account for 30 days. I'll fix my 1 million and you pay me maybe 5%, which is usually above the interest they pay for regular savings accounts, right? The same way that fixed deposit operates, certificate of deposit operates that way. But certificate of deposit requires you to have a larger amount of money. That is why the truth is the people that really makes a lot of money from investment are people who have money to invest. So that is why my encouragement is always in your 20s and 30s, it is to build funds, build funds so that you can have a larger pool of funds at some point to invest and take advantage of this big opportunity. Mutual funds, money markets are ways to build funds, right? Build funds for capital projects, for investment that can really give you good return. Because if you are doing certificate of deposits, you are so much empowered that you can dictate the term. You are the owner of the money. You can go to the bank that wants to issue a certificate of deposit to say, okay, I have this 1 billion naira that I want to invest with you guys, and I want 10% in the next 30 days. You have so much power to do that. Why? Because you have funds. You are the one, he that pays the piper dictate the tune. So that's the way it works. So certificate of deposit is a savings product that earns interest on the lump sum for a fixed period. It is different from savings account, which we all know, because savings account, you can walk into any bank, open the account, put your money and withdraw it the next day. But for a certificate of deposit or a fixed deposit, that is not possible. Once the money is there, it has to stay for the fixed term. And if you are going to change that fixed term, the disadvantage is that you would have to lose some interest for doing that because you are breaking it before the due date. CDS usually have higher interest rate than savings accounts as an incentive for lost liquidity. It is slightly different from fixed deposit because of the amount required to start and the interest. I've explained that already, that in certificate of deposit, you are the one dictating. So when they tell you the interest, you can negotiate it, even though that it will come with an interest. They will say, so bank or so company is issuing a certificate of deposit at 10%. You can negotiate and say, no, I don't want 10%. This is the money I'm looking to put. I'm looking to put 1 billion. I want more than that. And they will listen and say, okay, we can't meet that, but we can meet in the middle. Instead of 15 that you're asking for, we propose 10. You are proposing 15. Can we meet in the middle, push it to 12.5? So these are possibilities within investments that can happen. So that's what certificate of deposit is. The last slide, this is the last slide. Then I will open the chat for questions and answers. My goal, if you forget everything about this program, do not forget this last slide. My goal is to help you to have a shopping cart. This is a shopping cart. You are shopping now. And inside your cart, you have different investments, a diversified portfolio. I have said this in previous classes, I will say it again. If all you have is 1 million naira, and as I'm talking to you now, that 1 million naira is in one single place. You are sitting and standing on a long thing. You are sleeping on a bicycle. It is the kind of risk you are taking is so high. And I'm not even saying whether it's in piggy bank or no, what's the name? Piggy vest or cowrywise. I'm talking even if it's in a commercial bank, just one single place. That's where all your money is. Even if it is First Bank, you are doing a wrong thing because anything can happen. The bank may not collapse. What about fraud? Right? What about a greedy, God forbid, in Abuja now? I've been staying in Abuja for a while, and one of the things that we've been hearing is what's it called? One chance operators. They carry people on the road and then they force them. The first thing they do is they get them to transfer all their money to an imaginary account that they give them, after which they now push them out of the car. Some get killed as a result of that. So God forbid that kind of thing will happen. If all your money is in one single account and that kind of thing happens, so you have not only lost all, but if you have all your money spread in different places, there is no way all the money will go once. There is no way all the investment will fail once. It is not. The only way the investment will fail, all the investment will fail at once, is if the trumpet sounds today and we all go to heaven, and we know that there is no health again. So that's the only time all your investment will fail. Your portfolio must be something like this. You have mutual funds in your investment. You have stock. You have financial management. I've taught you financial management. I've taught you financial planning. I've taught you risk. You have ETFs. We'll talk about ETFs. You have REITs. You have bonds. This one on top that we can't see well is bonds. So you have all these things in your portfolio. It is very important. If you forget any other thing, don't forget. Diversification is a major principle of investment. Thank you. I will open it up for questions and answer. That's the last. Let me check. Let me be sure that that's the last slide indeed. Yeah, that's the last slide. So open it up for question. Screen sharing stopped. For questions, if you have questions, so like we always do, the mode is, and we can also use this session to ask some of the questions that you have from past sessions that I have not answered. Questions that I have not answered, please. So we'll have a speaking question and a reading question. So Rosalind, are you ready? I've not seen Jackie today. Where's Jackie? Is Jackie here? Jackie's not in class.
I don't think she's here.
What about the other person? The last person, what's his name? I know there are 3 of you. There's you, Jackie. Okay, I think I would let me make Adidayo a co-host today. I like her voice. I'll make her a co-host too, so she can join in reading the question as you as well. So let's take the first speaking question. Maureen, please go. Maureen, can you unmute yourself? Okay, Maureen is not ready. Let's go to Chuk.
I'm ready. I couldn't unmute.
Okay. Oh yeah.
Good afternoon.
Afternoon.
Okay, good afternoon, everyone. Please, I know I'm one of those that have made that mistake of putting on my money savings. For someone that has just that have been saving in dollars, is it advisable, okay, for me to go and collect all my money in dollars and convert it to naira to start, diversifying my investments, investing in all this portfolio, or I should just focus on just maybe investing in dollar, making a dollar investment,
Okay.
such as the just dollar.
I understand your question, and your answer is very straightforward. Leave your investment in dollars. If you are already investing in dollars, or you already have more of your investment in dollars, right? Leave your investment in dollars. This is not a good time because we all
So
do
I've not started making money. I've not started making investment. Like I said, the money has just been in the bank in dollars.
in your
So
DOM
I now
account.
want to make, yes, in my DOM account.
So the smart thing to now do is do any investment you're going to be doing, let it be dollar denominated. That's why we have dollar mutual funds, right? Open a dollar mutual fund with Codros, Cardinal Stone, Stanbic IBTC. Which bank do you work with? Which bank do you use?
UBA.
UBA has United Capital. You see, all the banks in Nigeria have investment banks. There are two, in fact, there are four kinds of banks. We have commercial banks, which are the regular retail banks and all of that. We have investment banks. Investment banks are banks that do investing, give advisory service. And a lot of times, the same bank, UBA would have UBA Capital. GT Bank has their own. Zenith has Zenith Capital. All of them will have an investment bank. The third type of bank is called merchant bank, right? All of them have investment in this. So if you're not comfortable with using Codros, right, you can just walk into your bank, tell them that UBA, they should link you up with UBA Capital, right? You want to open a dollar mutual fund account. They all have foreign currency investment. So I would advise you, since you already have money in dollars, don't convert your money to naira to invest. It is not really wise for now, except you want to buy stock, which now gives you an advantage. Because if you're buying stock now, it means you can buy more stock. Abi? And I gave this example to someone who is earning, I don't know whether it's this class or the last class, who earns in dollars already. And she's like, is it wise for me to now be buying shares in naira when I'm earning in dollars? I said, this is the best time for you, because now dollar is 1,100. Let's assume it is 1,100. It means you can buy more units of naira shares. Now, if you now say you want to wait till dollar start, if dollar now goes down again, let's assume dollar goes back to 700, you only be able to buy your unit of shares. The unit of shares that you can buy will now have reduced. So dollar is to your advantage now. Investing in the stock market is to your advantage now if you have dollars, because you can buy more naira shares with the dollar. Do you understand? But for other kind of investments like bonds and all of that, you can just keep your funds in dollar denominated investments. Thank you. Does that answer your question?
Okay. Yes, thank you. Yes.
Yeah, you're welcome. So let's do a reading question.
Please, can you expatiate on REITs and risk?
We are not on REITs yet. REIT simply means real estate investment trusts, right? And I said they are companies, they are just like you can buy shares on the floor of the stock exchange market. The same way you can buy REITs. And I said there are three companies that are currently listed on the stock exchange that you can buy REITs from. Union Homes, UPDC, and there is this one last one. I don't know why that name escapes me a lot. So, but during that class, I will show you the three companies that are currently trading REITs, where you can buy REITs, real estate companies dedicated to they develop real estate properties, right? And you can now subscribe. They share their profit with you at the end of the year, right? Risk is just a word to tell you that the higher your risk, the higher your return. Risk is what you are willing to risk. to get an investment, right? But we'll talk more about REITs in subsequent classes. So, and every investment, why risk is on that diversity? It's not like there's an investment called risk. Know that there's no investment called risk, but risk is a major factor in investing because there are no risk-free. So someone said to me, can you tell me investment that 100% sure I won't lose anything? I said there's nothing like that. There is no investment that is 100% sure. You don't want to take any risk. Do you know that even putting your money in the bank is also taking risk? Because if just like this, what's it called I just described right now, this one chance can happen. Fraud, they can commit fraud on your account. And all of that, everything is risk. But the risk can be managed. And that's why you do diversification to manage your risk. So let's do another question. Chukwuemeka, unmute yourself.
Okay. Good afternoon, Mr. Shea.
Afternoon, sir.
Yeah, good afternoon, everyone. Yeah, my question is just a bit of clarification. You mentioned it in passing, but you asked the question in passing, but you didn't really answer it.
Okay.
The difference between commercial paper and treasury bill.
Okay. All right. Thank you. All right. Thank you. So the major difference, I said they work almost the same way. The major difference is the issuer, the people issuing it, right? Why treasury bills is strictly government. Government is the one that issues treasury bill for the same purpose. Commercial paper is issued by public quoted companies like First Bank. So I need to raise money for, and don't forget that both, so let me talk about the similarities first. Both commercial paper and treasury bills are for short-term financing. I need money. I want to use to quickly do something, right? And I don't have time for bonds because bonds is 1 year, 2 years, right? I need something I can quickly turn around fast. I will issue treasury bills, or commercial paper. While commercial paper is for private companies, let me know, it's not for private, it's for public quoted companies. I mean, for the corporates. T-bills is for government and central bank. So that's but they work, the principle that guides both of them is the same way. It's just like saying corporate bond and federal government bond. You know that corporate bond and federal government bond are the same. They operate the same way. The only difference is that corporate bonds is issued by public quoted companies for long-term financing. Why federal government bond is issued by government for long-term financing. So bonds are used for long-term financing. Treasury bills and commercial paper are used for short-term financing. I think that explains, or that should be sufficient. Let's do a reading question. Adedayo, you're raising your hands though.
Yes, I wanted to also ask a question.
Okay.
Well, let me take the reading one first.
Okay, reading question.
Okay, this is from Opeyemi Ainde. I think he was asking when you were explaining that scenario on commercial paper.
Okay.
So he said, what if Tunde bought it at 100,000? Will he be paid 110,000? Since you said whether it is bought at premium or at discount, they have same face value.
Okay, so in that example, I said he bought it at 90,000 naira at discounted value. This is it. They tell you this thing before. Don't forget that the major thing that singles out fixed income instruments is that you know what you are getting into before you get into it at all. You know, they place their cards open. You see it before you invest. So if they have they will show you. Nobody would say 110, invest, buy something at 110,000, you get 100,000. It is not possible. Or buy something at, so it will always be at a discount, something that they know will be favorable to you because you are going to see the terms before you get into it. So they have to make it in such a way that it will be clear that if I invest 100,000, right, all things being equal, I will get 110,000. And if I invest 90,000, I will get on. But usually they will put a face value, and it is always a discount. It's always be discounted so you can make your own profit. If not, why would you do it as an investor? It doesn't make any sense. I hope that makes sense to you though. So let's do
question.
your own question. Okay.
Yeah. So just as a follow-up to what you said now, because I know when I was reading it, I had the same question he had. So is the face value will be 100,000, right?
Let me go back to
that's what.
Hold on. Let me go back to the slide so I can be sure.
Okay.
You are talking about
that scenario of 200,000 and 206.
No, that's commercial paper.
Yes, commercial paper.
Yeah, tell me. So what's not clear?
So would the 200 million will be the face value?
Yes.
And that's the discount to, like, at the end of the day, they're going to say they're going to give you 206 million, but it's at a discounted rate of 200 million.
Makes sense. So, I understand what you're saying. Yeah. So I think my scenario, I put it upside down, right? That's what you're trying to point out.
No, I think it's okay. It was just the clarification saying that when they're advertising it, they're going to tell you that it's 206 million, which is what you will get eventually.
Of course.
But you're buying it at 200 million, which is the discounted figure.
Adedayo,
that's what
you are 100% correct. It's true. So when you're buying it, you already see that it is 206 million. I stand to gain, right? But I'm getting that discounted value of 200 million. Yeah, you're correct. That is it.
Okay. And that 200 million is also what is called the face value. That's
excellent. Yes.
Okay. All right. So very quickly, sir, my own question has to do with mutual funds.
I thought you have asked a question before. Is that not the question you have? You have another question apart from that?
No, yeah, I was just trying to clarify his own question because I had it as a question in my mind initially.
Okay.
But my own real question, okay, let me leave the mutual fund, is for budgeting. So you have
calm down. Wait, calm down.
Okay.
Calm down. Let me take another person first. I'll come back to you.
And come back.
Because you are taking me out of today's question.
We're discussing today. Class. Okay, no problem.
So let's
fine.
do today's class first. Felix, are you there? Felix.
Okay.
Yeah.
Good afternoon, Mr. Say.
Afternoon, sir.
Yeah, good afternoon, everyone. Yeah, I have a little concern regarding, when we talked about shares, you said something about the CSIS, if I'm correct. And for mutual funds, we don't have that CSIS. So my concerns, I'm being afraid, because with the CSI for the shares, I'm a little bit confident that my investment is secured. But for mutual funds, for that of bonds, I'm not that really confident about it. So I want to know, I want to verify.
Okay, all right, I understand.
About that, so that I have some confidence to invest in that area.
Okay, that makes sense. So what happened?
That's the question.
Well, by the grace of God, we'll survive this network today. Okay, so
yeah, I'm still here. Did you get the question?
Yeah, I got your question. I got it. So you're talking about CSCS account, right?
Yes.
Which is the Central Security Clearing System account.
Yes.
That's the account you get when you open. So you only get a CSCS account on one condition. There are several kinds of brokerage accounts, right? One of such accounts is called equities, which gives you access to a stock trading account or the stock market. So when you're opening an equities account or a stockbroking account that allows you to trade stock, CSCS comes in, right? But when you are doing other forms of investment, like mutual funds, like for bonds, you don't need a CSCS because it's directly managed by debt management office through your custodian, right? So you don't need a CSCS for all of that. So what you can do for that is, okay, you might want to say, look for a company that you are more confident in. If you want to do mutual funds or other kind of investment, I've just said why I invited Codros is because I have a relationship with them. They are the ones that I use personally, right? I am not imposing. It's not an imposition. You can, and that's why I kept saying that I showed you a list of top stockbroking firms in Nigeria. This thing is easy. You can simply call any of them. They all have websites. You go on their websites. I can share the list again. I'm sure I've shared it before. I can share it again. You go to their website, check their contact details. If you're in a state like Lagos, in fact, any of the states of the country that you are in, they have branch offices. You can locate their branch. If you are there are some of us that are physical inclined persons, right? Meaning that I prefer one-on-one, face-to-face interaction than online. I can visit their office and have a sit down with them. Okay, this thing. Investment is about asking a lot of questions. So do not until you don't say because she has taught you, until you have done your own assignment, until you understand it. Right? That is why I said it is not enough to attend the class once. Sometimes you cannot get the full meat of a conversation at one sitting. You have to listen to it again. Even me, I listen to these classes that I teach. I listen to it again and again because there are things I will have missed out in the first instance that I can get second until I've understood it, right, before I invest. So there are other firms, right? Even me, as much as I love Codros, all my investment is not with Codros. I'm using First Bank as well. I'm using First Bank. I have mutual funds, which is money market in First Bank. I have First Bank money market, right? And I share the contact of the person with you guys as well. John is my account officer there. You can call him. Okay, I'm interested in. So if you know that, so this is about for other kind of investment, the long and short of the story is that for the other kind of investment, you will not have a CSCS account. A CSCS account is only applicable to an equity or a stockbroking account, not to other kind of accounts, if that makes sense.
Okay. Yeah, it makes sense. So, for instance, now, if anything happens to that company,
Yes.
what will now happen to that investment?
Truthfully,
If
anything happens to the company and what you are doing, what you have is mutual funds with them,
mutual funds, yes.
your money is gone.
Okay.
That's the blunt.
That's the truth.
That's the blunt.
Okay. Now I understand perfectly because that was my thinking. I've been thinking about that.
No,
If it happens like that, that means
it's good that you asked.
Okay.
So that is why even you don't, and you know that the way this thing works, you don't have to do your mutual fund cannot you don't have to do it in one place. Like I said, I have mutual fund in Codros. I have another mutual fund in First Bank. In Cardinal Stone Partners, all the bonds I'm buying through Cardinal Stone Partners. I have an equity account with Cardinal Stone and Codros as well. So this thing is a mix because I said we want to deceive ourselves. Nothing is fixed. You can only be strategic. You can only be, a strategic thinker and all of that. But that's the play. If I tell you otherwise, that 100%. If SVP is Silicon Valley Bank in the US, it closed down earlier in the year. SVB is the size in terms of assets, in terms of money, in terms of cash flow. It is the size of 5 biggest bank in Nigeria. That is, you combine Zenith, UBA, First Bank, all those fugas, combine all of them together. SVB is bigger than them, and it failed. If that one can fail, what is Zenith Bank? What is the First Bank? Do you understand? So please, let us be guided. So let's do a reading question. Rose, I want to hear your voice now.
Okay, please share the list of stockbroking firm again.
I will.
That's all the questions that we have for today.
Oh, okay. Dayo, you can ask your question now.
Okay, so thank you. So first is on mutual funds. I wanted to find, because you put them under fixed income or fixed instruments rather. I wanted to find out if they can unilaterally change their rates, because some years ago I actually invested in mutual fund. I think then it was 17 or 13%. And then before I knew it, it started going to 9, 8, 7 until it was really like maybe 5 or so. I had to take my money out or sell it. I don't know what the correct term is. So in that regard, I don't know if we can still say that it's
Okay. Are you done? Have I lost you?
It's like a fixed income. And if they can on their own decide, even though they told you that it's 17 or 18%, can they just change it by themselves? And then the second one is about budgeting. So for people who earn like a month,
wait.
okay,
Let me answer the first one first, so I don't
one, okay.
get muddled up. Yes, they can change, because if you are filling out the form, if you are filling out any form, do you read the terms and conditions? Sincere, honest question. Do you?
I do sometimes, but some other times I just
But do you
overlook
know
it.
that for any
Mm,
investment, they put these things there, that they reserve the
yes.
right, based on market conditions, to change, to adjust based on regulation. They will come up with all these complex terms, right? That a lot of us do not pay attention to. They can't change it, right? But why it is a problem for you is because it reduced from 17 to 7, a bit to whatever. What if it had increased from 17 to 35? Would you have a problem with them changing?
Not at all.
So that's the problem. And these are investment, right? Just like I said, it is still fixed instrument, except, so now this is the dichotomy, or this is the gap that you need to also understand, that there are some mutual funds that can also be a variable income instrument. Meaning that, let's say, if I invest in a mutual fund that is equity focused, right? That is equity, strictly focused on equity, which is rare, right? It can be a variable instrument. A very good example of that mutual fund, because in Nigeria, mutual fund ETF, I'll tell us the slight difference in them. Maybe I should just leave that to that class so that I don't jump ahead of myself, so that we can really understand it. But to answer your question, it is that, yes, even though it is fixed income instrument, sometimes based on market conditions, which you have already also agreed to initially when you were starting the investment, right? They can adjust it. But that doesn't mean that when you're starting the investment, you do not know what the potential of that investment could be. Unlike stock, that when I bought my Transcorp, honestly, I didn't know Transcorp was going to go from 1.3 naira per share to 6 naira. And I didn't know I was going to make 5 million within a year on Transcorp. I didn't know, right? So that is variable. And the same way, I tell you guys companies that I'm making money from. But there are companies that I'm losing from, that I've had to sell my shares and move out. So you were looking for the term. The term is called, that term is called divest, right? Just like you can invest, you can divest. Divestment is taking out your money from an unprofitable investment, or you are exiting an investment. So you can divest. So there are some instruments that I have divested from as well. When I saw that, no, this one is not going well, like the way I thought, oh, this is a mistake. And as an investor, you must not beat up yourself, because you will make these mistakes from time to time, right? You're not going to be, it's a journey, right? There are times that you would prospect, you look at all the indices, they look right, you will make the decision. But later, you now realize that, this is a mistake. Oh, thank God it's not a permanent life mistake, like choosing someone to marry, you marry the wrong person. That's the one that you cannot change your mind and say, okay, I changed my mind, I'm not marrying you again. If it is not domestic violence case, so because there are some partners you choose and you know that our goals don't really align. Now have to be managing, you're realigning yourself and all of that. Investment is not like that. It's not till death do us part. No, if it's not working, I divest and put my money somewhere else. I hope I answered the question so I don't overflog it. You can
Yes,
ask
you
your
did.
budgeting
Thank
question.
you so much. Yeah, really clarified it for me.
Ask,
Okay,
ask
so
your
the
budgeting.
budgeting one, so someone who earns the monthly income, but then sometimes during the year, they also give like an allowance, maybe like 2 or 3 times during the year. How do you
Is it
from
me?
the onset bring it into your budget, or maybe just Sorry, you're saying something.
I lost you at some point. So I was wondering if it was me or you.
Okay. So I said if someone has like monthly income and then you're trying to budget, like prepare your budget, but then in the course of the year, maybe your office pays you 2 or 3 allowances at some point during the year. Do you factor it in to your budget at the beginning? So, because I had that issue when I was preparing mine. So what I did was, okay, maybe I should just do the other allowances, maybe put them in percentages and just say this percentage for investment, this for this, but nothing really going to expenses. Because it was looking like too much work for me to start breaking them down into what portion of this will go for expenses, since it wasn't like a monthly thing.
Okay.
So I
So
don't know
this is
if
quite
I've explained the
straightforward. It makes
question
sense.
well.
No, well, I understand your question because it happens to
Okay.
all of us. Once you have a 9 to 5, there are times that you get bonuses. So this is what I do, right? I do not plan, I do not factor in the monies I'm not expecting. This is the way my psychology works, or my money psychology, the way I've wired myself to think about it. Any money that I'm not expecting that comes into my account is automatically 50% of that money is investment. I don't doubt it. I don't think about it, right? So for you, you can say, because sometimes you need to take care of yourself, you need to do the baby girl, right? Right? You can say that potentially any money that you can't factor in your bonuses into your salary, because my bonuses comes twice a year, right? One comes in January, and that's the time. So I mentioned that, I don't know, maybe it's in this class or the other cohort, where I said, because people kept asking, why is that January? I mentioned buying stock in January a lot. Why? I said it's because that is the time I get huge amount of money at work. That's when they pay us upfront bonuses. They pay us upfront allowance. It comes in January to between January and February. So once I don't plan, I don't put that money is not a spending money. Once it enters my account, 50%, it is my psychology. I have programmed myself for it. 50% of it goes into an investment. And the remaining 50%, I can now trap down and say, okay, what are things that I want? Because all of us will have bucket list of wants, right? Things that I want. Maybe I want to buy a Mercedes. It is not a bad thing. So when people attack me for saying don't buy, I am not saying don't buy things. I am saying be sure you can afford the things that you are buying, right? Driving a Mercedes or a Lambo is not a big deal if you can afford it, right? Living in a 5-bedroom duplex is not a big deal. So if my desire is to buy a Lambo or a Mercedes, right? Immediately that 100% of money comes in January, I have invested 50%. That's my future. The remaining 50%, I look at my wants, the bucket list of wants that I have, right? Which one of these can I take care of, right? Okay, my Mercedes money is not complete. Let me save 30% into that Mercedes Benz Porsche. The remaining 20%, I want to take my babe out. I want to do all the things that sounds luxury. I want to buy more clothes, because it's the money I wasn't. That's the way I program myself. Even the things that I do on the side, my side hustle. I was telling someone I'm mentoring, one of my mentees, that when he sent his registry, because I have a platform where you can do formal mentoring and you have to pay for it. When he sent the mentoring, when I told him, if I've been on this call now, I told him that maybe this money comes in, it is going to investments, because that's the way I program my mind to work. Any money I'm not expecting, once it comes in, the first thing on my mind is 50% investment. After I've done that 50% investment, invest first, then spend. That's my principle. So for you, the best way to really answer questions like this is to give analogy, to give practical example of things I am doing. The way I'm saying it, you're already thinking in your head, what will work for you, what can work. Maybe you now, 50% may not work, maybe it's 30%. Maybe you now, no, I'd rather just do 80% and use 20% for myself. Or some people, I'd rather use 80% and spend it on myself and then save 20%. But the rule is the same. Any money that comes in as extra, your bonus is an extra, commission is an extra. You don't have to factor into your monthly day-to-day budget, because it only comes once in a while. But you can plan your investments and your wants. In fact, I advise people, let your wants be funded from your excesses. Excesses meaning that the excess income that you have. Make sense?
Yeah, so thank you. Funny enough, when I was trying to figure it out, I did 50% for investments
Excellent.
and
You're on
I
the right
reduced
path.
it. But
Right path.
I'll go back.
All
Yeah,
right.
thank you very
Any
much.
other question? If there are no, Rosalind, do we have any other question? Check. If we don't,
No, we don't have any other question.
okay. Usman, have I called Usman? Usman, your hand is up. Usman, your hand is up. Okay.
Hello, good afternoon.
Afternoon.
Yeah, I was trying to unmute, but it wasn't working.
Sorry. I was one that did it.
My question. Oh, okay, it's fine. Fine. My question is, do let's say I'm working with Codros now.
Mhm.
Do I select the stocks, the mutual funds that I want to buy, or the firm does that for me? Like, do I have an assigned broker that I'll just call and say, oh, I want to buy transport and buy so amount for me, or I don't know, do I just put money in
Okay.
their account and they select it?
All right. Thank you. Initially, when you open the account, once the stockbroking account is open for you, they expect to get an instruction, which is called a buy instruction. So there are two ways. It's either they open the account for you and then create your username and password so you can log on to their dashboard app and then select the stock that you want to buy by yourself. Or you send an email instruction to say that, thank you so much, you've opened the account. These are the shares. These are the quantity I want to buy. This is the price I want to buy. Right? You've already gone through their dashboard. You've seen the price of the shares, or you've gone to NGX website, which is Nigerian Exchange. You've seen the prices of the shares, current price. So that's why I advise do it when the market is open because it fluctuates. It can be 1 naira now, and the next tomorrow it can be 1 naira 30 kobo, right? So stock exchange market opens between 10 a.m. and 2:30, Mondays to Friday. That is a trading gateway, right? Just go to NGX website. You always see is there, right? If you go to Codros app too, you will see the price of stock. So select which one you want to buy, pay with your card, right? And then that transaction is completed for you. Or you send a buy instruction based on the same parameters. You've seen the stock, okay, Transcorp. I probably shared a list of 15 stock I think everyone should buy, which I also bought, which I have, right? Stock that I perceive would be high growth stock. These are just based on my own knowledge and analysis. Out of that 15, you can say, okay, I want to buy 3. So you choose the companies you want to buy, the price, let's say it is 15 naira per share. You want to buy 1,000 units, 15 times 1,000, 150K, right? You move to the next one, how much? You do that mathematical total figure, you send it to Codros account, make sure you're sending it to the company's account. They will buy the shares for you. Once they buy the share, you will get an alert from CSCS, right? That will show you so number of unit has been credited into your CSCS account. So that's the way it works primarily. And who else? I think someone is saying I have a question. Rosalind, can you check? I just saw an alert that someone said I have a question. Can you check and read the question?
Okay, I think the person is saying that you shared only 5 lists of stockbroking firm.
No, I didn't share 5. I shared more than 5 because I remember saying that you should invest in Fugas stock. Fugas, I said there are two, the way banks in Nigeria are categorized. We have the top tier banks and other banks. I said the top tier banks are categorized with the acronym FUGAZ, FUGAZ. F for First Bank, U for UBA, G for GT Bank, A for Access, and Z for Zenith. I said those are 5 stocks that you can look at. I also shared like a video that shows top 5 performing stock in Nigeria. I remember I shared that video as well. So 5 plus 5, that's already 10. And I also remember mentioning some other stock in my examples, that the shares I'm buying, the shares are seen grown over, at least I would have mentioned 15 minimum, because I remember I mentioned BUA. I've mentioned Dangote, I've mentioned Dangote Sugar, I've mentioned Dangote Cement, I've mentioned Boa Foods, I've mentioned Boa Cement. So those are stock already that you can think about. Any other question? It's already 1 hour, we've done 1 hour, 30 minutes. Mr. Shea, kindly go over the steps of buying shares right from mobile device. If there is, I can't, please, I'm trying to read the alert. Read the question, Rose, please.
Somebody said, Mr. Kindly go over the steps of buying shares right from my phone device. If there's a PDF for that, please share.
Oh, okay. So it depends on the app. It depends on the company that you're using. So if you're using, say, Codros now, and you've signed up, you have signed on into their app. I believe all these apps are user-friendly. But what I'm also going to do as part of this program, right, I'm going to invite one of their staff to come and do a demonstration. There's actually a video that they did in last class. Maybe I can send that. I can send that. It's because it's the same thing primarily, just taking people through how to use the app to buy and all of that. But the easier way to do it is just log on to their, if you have access already, don't forget, if you have not opened the account with them, you will not have access to use their dashboard. It's just like you saying you did not open GT Bank account. You now downloaded GT Bank app and you want to log into the account. Which account do you want to log into? The same way. So you need to open the account first. They will create a username and password for you. That is when you can now log in. When you have, let's assume that you have now logged in, right? And you want to buy shares. You go to the trading. There's different options on their dashboard. You will see a place that is maybe equities, something about stock trading, right? Click on that and you'll be able to see the shares of different companies and the price that it is trading for. So you buy, you pay with your card. Once you do that, they will get the alerts from their end. They will complete the leg of the transaction for you. Like that is, what you are doing is giving an instruction. When you buy from your app or from your computer, you are not really buying from the stock market because you don't have a license to trade in the stock market. They have the license. So what you're doing is to give them an instruction to buy. So when they get that instruction, they buy for you and you get the alert that it has been bought. But I encourage you to do it when it is trading hour, because if you do it now, right, on a Saturday when NGS is not open, they're not working, and on Monday, the price of the shares has changed, your order will be rejected and you have to start the process all over again. But you can subscribe to mutual funds anytime because mutual funds is for them. The same way, on the app, you will see a portion for mutual fund. What I will do is after this call, I will share the demo video with us along with this video. Yeah, I can see some hands that are just gone up again. I can see Cecilia's hand. I can see Joshua's hand. Josiah. Who wants to go first? Cecilia, go first. Ladies first.
Okay, good afternoon.
Afternoon.
Please, it's just clarification I need. On I think the first day of the class, you
Yes.
mentioned instead of waiting till your like house rent, if you want to pay, instead of piling everything at a lump sum, you said it's advisable on a monthly basis. We should we should be saving the money, right?
Yes, I said it.
Then is it into a fixed account, or that's what I just want to confirm?
Okay, thank you. So usually you can have, it depends, whatever works for you. This is what works for me. I have an account with Carrywise. Carrywise is like Piggyvest. I like them because they enforce discipline. They are strict. You cannot, once you lock up a fund in Carrywise, you cannot withdraw it until the date that you have set, right? So I think they are good for, they are a good goal-based platform. Then Piggyvest, those two, I don't know about the rest. Those two I've used. Those two I know I've stayed for more than 5 to 6 years, right? So, and for something like that, I want to at least, for any big thing I'm doing that is investment, I like 5 years. 5 years gateway is what I want to have seen them for 5 years performed. right? So what I do with Cowrywise is the amount of my rent per annum, right? Let's say my rent is 2 million. I divide it by 12, right? Say is, no, 2 million. I need a figure that I can do mathematics easily. 1.2 million. So it means 100,000 naira per month, right? I open a Cowrywise account and I set the withdrawal date for December 31st of the year. And this is what I do. That's what I do. Every month, I pay 100,000 for my salary into that account. But because me, I also have other things I'm doing, right? That's why I said by June this year, June, I've already completed my rent. My rent for the year has already been completed by June. So there are some prayer points I don't pray. Example, God, my rent. No, I don't pay for rent because God gave me a job that I can just plan and pay the rent from. I don't have to pay for rent. It's a blazeless and it's a productive, a waste of productive time to be praying for rent. So you can pay it monthly into this account. It is locked away in that account. And then by December, when the December 31st comes, I take out the money and I pay. And don't forget, I also said, I also said, don't put all your eggs in one basket. Cowrywise is just for one type of my rent, one type of my savings, which is only my rent. So God forbid that before December, they fold up. It will pay me, right? But it's just the money of my rent that is there. I can easily get my rent paid from my emergency savings account, which is for unforeseen circumstance. So I said, your emergency savings account, you don't withdraw money from your emergency savings account. You only withdraw when there is an unforeseen circumstance, something that you're not expecting happens to you. Just like what I've just described right now. I've saved my rent jejely. I know that they will fold up. They now fold up before the year ending. All I just need to do is go to thank God that I've learned this financial thing, the financial management thing early. I just go to my emergency savings account and withdraw money from there. I used to pay my rent. So you can use those kind of accounts for your rent, or you can use mutual funds. You can use a money market account for your rent. So it's all dependent on what you want to do. Right? I do not use my money market for rent. I use my money market for target or goal-based savings. A good example, I'm paying my school fees in January, right? And I have to pay 5 million naira because I was doing my PhD in Babcock. I moved to Abuja, right? And because I'm going to be in Abuja for a while, Babcock is bent on, attendance 75%. I can't be making it to school every weekend for lectures. It's not comfortable. It's not feasible. So I went to Bayes University, spoke to them, and okay, we could do a transfer. I can transfer my studentship to them, right? And I'm going to pay so amount, right? It's quite high, maybe times 2 of what I was paying in Babcock. But okay, I can develop. Those are the kind of things I use my mutual funds, my money market for goal-based savings, right? For career development, for personal development, for if I want to travel, and all of that. I hope I answered the question. Let's go to Josiah so that we can close the class. Josiah, you can unmute yourself and ask your question.
Okay, thank you very much, Tashi. Thank you so much so far. My question is just, is it advisable or is it wise, or are there advantages or disadvantages to having multiple stockbrokers? Like, I got the shares with particular company and I want to get another share with another company. I mean, must I use the same stockbroker or can I have multiple stockbrokers? Thank you.
Okay, for stock accounts, ideally, to be honest, you don't need multiple accounts for stockbroking because all of them, they do the same thing, right? It's just like you saying that I want to open savings account with Zenith Bank, another savings account with UBA, another savings account with GTB, another savings account. There is no difference in what stockbroking account does. All of them are the same, right? And because all of them are the same, the only differentials or the only thing that, now that unifies them is that CSCS account. So once you have your CSCS account, so I would rather, maybe you're not comfortable with a broker again, I'd rather you just move. For instance, now, maybe I'm with Afri Invest. Maybe I'm with Afri Invest and I don't like their customer service. I don't like the user friendliness of their platform, of their mobile platform. Maybe it's not always responding. And when I call them, they're not always. One of the secrets why I chose Codros is relationship. That is for me. It works so well for me. I want to be in a place where if I pick up my phone and call my account officer now, she's going to respond. If I ask any question and she can't give me the answer, she will tell me that, okay, by Monday, I'll get back to you. And she will get back. I don't have to call her again. I like that sort of thing. So I'd rather be in a place where they have my time. Because since they all do the same thing anyways, right? So just look at what works best for you. And there's nothing that dictates that you have to stay with one person. If you are there for 1 month and you're not satisfied with their service, carry your kaya. You can port the way we can port our lines. You can port from MTN to Glo, or from Glo to Etisalat. The same way you can port your stockbroking account. Just carry us as far as you have the CSCS, carry it and move to another player. It's very easy. But there's also not any law that says that you cannot use multiple share stockbroking firm. The only disadvantage I see, this I've not ever thought about, I'm just thinking about it, I'm thinking about it now. The only disadvantage I see is that your stock is what's that word? It's not, you can't accumulate your stock. It's not easier to build a goal like that. For instance, if I say I want to have 1 million units of MTN shares by the end of next year, right? 1 million units of MTN shares, which is a very good goal. I rather it is with Stanbic brokers, for instance. I'm just using a name. It's with Stanbic brokers. So I can be seen as that 1 million MTN shares is growing. Right? Except, of course, you now also want to say that let me do MTN shares with Stanbic brokers. I will do 1 million shares with Codros. 1 million Etisalat with Codros. I will do another 1 million with another player. So I'm just thinking, I've not thought deeply about your question. It's a very valid question. I'm just thinking as I'm saying it as well, because I really do not see any value in having multiple stockbroking accounts, but you can have multiple mutual funds accounts because it is the operator that own the mutual fund. When you buy Codros mutual fund, you are investing into Codros as a company. But when you buy MTN shares to Codros, you are not investing into Codros, you are investing into MTN through Codros. Make sense? Any other question? Let's try and round up on time. It's getting too long. Would I still have access to my stocks if the brokerage company crashes? Of course. That's the beauty of equities. You have access to yours. Like I said, it's not just about them crashing. If at any point in time you are no longer satisfied with their service, you can carry your account and go to any other stockbroking firm that you desire, and nobody will catch you for that. In the absence of any other question, I'll thank you guys for taking time out to attend class again today. So I will share this class with everyone again. Thank you so much. And thank you so much, Rosaline. Thank you, Adedayo, for co-hosting. The next class would be, I don't think we have any other class during the week. The next class will be next week, Saturday. But while we're at that, ensure you follow up. So take this upon yourself, right? Call your stockbroker yourself. Be on them. If there's anything you've asked them to do, they have not supplied. You don't need to tell me. Call them. It is your money. It's not my money. Do you understand? Take it in your hands. Call them regularly. Ask them any question that is not clear to you. That's why you guys have Ifedayo's number on the phone. Call her. Let her put you through. If there's anything you don't understand, it is now what I'm just doing. I'm just there to guide you on the journey that you're embarking on. It is your journey. It is not my journey. It's your journey. So you need to put all of yourself in it. And that's the way to do it. Thank you, everyone. And enjoy the rest of your Saturday. Bye.